Good morning, everybody. It's Friday, July 26th, 5:26 a.m. Central Time. Grain market's fairly quiet this morning. Row crop's a little bit lower. Wheat is a little bit higher. Matt Bennett is here. Guys, let's start off with export sales.
U.S. corn export sales were soft last week. Net corn sales were reported at 13 million bushels, down 24% from the previous week and down 29% from the prior 4-week average. Japan was the largest corn buyer for the week. Net soybean sales fell below pre-report expectations at 3 million bushels. The print was down 61% from the previous week and down 63% from the prior 4-week average. The Netherlands were the largest buyer for the week, and net wheat sales were near the lower end of expectations at 11 million bushels. The print was down 47% from the previous week and down 46% from the prior 4-week average. South Korea was the largest wheat buyer for the week.
I'm starting to take a closer look at new crop sales. New crop corn sales were actually pretty good at 745,000. Japan was the largest buyer. New crop soybean sales were not bad either at 830,000. Unknown destinations, the largest buyer at 723. Matt, let me throw this up on the screen. Chinese purchases of new crop U.S. soybeans are down 97% from the prior three-year average. They've bought basically nothing. Now, there was, again, purchases or sales to unknown destinations, pretty large chunk last week. My first question would be why? Why is this the case that China's purchases are essentially non-existent for new crop?
Well, don't you think some of these unknowns are probably China, first of
Yes.
all? I mean,
Yes.
yeah, I think you and I both kind of know that. Second of all, I think that, they've tried to make a point that, hey, we're going to do as little of business out in the open with the U.S. as is possible. They don't, being a friendly trade partner, if you will, or a fair trade partner. I mean, that's not something they've ever been known for. And so, I guess whenever it gets right down to it, they bought some beans, but they haven't bought very many at all. And I think they're going to buy all of them off of Brazil they possibly can. I know a lot of people get aggravated with that, but you and I both know if they're buying Brazilian beans, they're taking beans off the world market. So it does open up a market for us. But these new crop sales are awful. But I've got to think we're probably, if you had 800 and some this week, for unknown, I mean, here's the thing: you're probably over 1 million for China. That's my personal opinion. When it's all said and done, you're probably over 1 million, but it's still not what it's been the last 3 years.
Is China underbought, and is that a positive potentially as we move forward?
I mean, I hope so. I know all the talk about their demand backing off is more of a longer term thing than a short term thing, but they certainly have had a little bit of a pump the brakes type moment here over the last couple of years with their economy and everything else going on for them. But I don't know. I've got to think they're underbought. I think that they're underbought all the way around. I do think that the Chinese, I keep thinking they're probably going to be buying some corn. This sale earlier this week to unknown, I kind of feel like that could be China. Whenever you see some enthusiasm in the corn market that's otherwise tough to explain, I always feel like China might be in buying some corn. So I don't know. Maybe they're buying a little bit of corn too.
With regard to politics and possible Trump presidency, there has been, I've seen the question like, hey, if they really think Trump is going to be inaugurated in January, why wouldn't they load up on U.S. soybeans now and take delivery prior to that? The fact of the matter is that China doesn't have to tariff U.S. soybeans if they really need them. The tariffs, as I understand it, are still in place in China, but they're just waived. They've been waiving them for years now. So, I mean, I don't know if that's the best argument. I could make the argument that maybe they're underbought. I think a lot of it will come down to Brazil. Brazil's crop going to be 170 million, or do they have issues? I don't know. I have a couple other export charts here. So here's export sales, new crop soybeans to all destinations. And we are almost back to where we were in 2019 during the trade war. So small victory, I guess. We were running well below that. Corn export sales are still not good. We're like the fourth or fifth worst of the last 10 years, but very much toward the bottom of the barrel. So I don't know. I hope that this means that there's more to come, that we're so bad that it can only get better, right?
I mean, yeah, I'm the same way. I hope that that's what it means, because you and I both know when prices go down, you got to do something about demand. I mean, you get a demand-led market at some point. That's exactly what you want to see instead of some supply disruption. And who knows, sometimes whenever you get both to coincide, like a 2012 type thing, it gets pretty wild. But bottom line for me, we've got to have demand continue to ramp up, especially if Brazil does have a 170, Joe. I mean, the ramifications of that and taking world stocks on soybeans from the start of this marketing year from 100 up to the end of next one, when USDA says 128. 28% increase in soybean stocks in 2 years is huge. So, yeah, and the price ramifications, once again, is not good. And so, yeah, obviously with corn, we're got plenty of corn in the U.S. We got plenty of corn in the world right now as well. So we need to see exports really ramp up.
All right. Speaking of unknown destinations,
We did have a flash sale of soybeans yesterday. U.S. exporters sold 10 million bushels of soybeans to unknown destinations for delivery during the 24-25 marketing year. This is the fourth flash sale of soybeans to unknown destinations since the beginning of the month, totaling 32 million bushels.
I didn't look at the specific new crop total commitments to unknowns, but it's got to be pretty large. And as you mentioned, a lot of that may be China. This might have been China.
No, I mean that absolutely. That's what I felt all along. Maybe they're kind of flying in here under the radar. I mean, I think that's something they've done a lot of times, but it just seems like they're really trying to drive a point home this year. So I don't know. I've got to think it's probably them. But
Let's go to weather.
Government warnings regarding excessive heat and rapid onset drought remain in place. Hazardous heat is expected to impact the U.S. southern plains this weekend. Temperatures well above 100 degrees are anticipated. The heat is likely to continue and expand through the first week of August. Rapid onset drought is possible in areas of North Dakota, South Dakota, Nebraska, Kansas, and Missouri. Rainfall will be fairly limited through this weekend. Some rains return to the central and southeastern portions of the U.S. Corn Belt at the tail end of the 5-day period. The 5 to 10-day Euro model introduces more widespread rain for the U.S. Corn Belt.
I'm reading the Euro model at least as being a little wetter and a little cooler this morning. I don't know if that's why soybean futures are down or if that's just coincidental, but looking at the rainfall maps, especially when you go out to this first 4 or 5 days of August, there's actually some pretty substantial rainfall in the forecast for a lot of the Corn Belt. The plains and far western areas still going to be dry, but this is a little bit wetter than it was yesterday. When you go to the heat, it's not as extreme as what we were showing you guys yesterday in this morning's model. And this stuff changes all the time, of course. Here's just an example of how hot it's going to be. Monday is going to be one of your more extreme days. Some of these areas of Kansas and Oklahoma are going to get up to 100 degrees, 90s across a lot of the plains. These maps, the 5 to 10 and 10 to 15, are drastically cooler, at least as far as the Euro goes relative to yesterday. Matt, what's your read on this heat situation in the West?
yeah, I mean, I guess the way I've been talking about this week is that is your last real hope, I think, to buoy the market or rally the market, not just stabilize it. I mean, if you're looking for a rally, you need to see these heat maps actually more extreme. I don't wish that on anybody, especially when you're considering, where this all is. I mean, it's predominantly cattle country. And so, you don't want to see those type of temperatures during the day and overnight. Obviously, you end up with some loss situations that nobody really wants to see. And I think that may have had something to do with the cattle market yesterday, to be quite honest with you. But, as far as this goes, again, I mean, it like you said, I mean, every 6 hours you get something new to look at. I mean, there's 1,000 maps that you can look at. And so it does get a little bit confusing. But when you start to see that trend back off of the extremes, it's something that I like to see. But at the same time, once again, someone who's trying to get bullish, I'm telling you what, if you take away that threat, I kind of see it like whenever barrel came up through the driest areas of the Eastern Corn Belt. If you take away the threat of dryness in the West, Joe, I don't think the market's going to look like much fun here moving forward.
We've had some strength in the soybean market this week. Do you think that that's because of this heat situation, or is it just a short covering / recovery type event?
I think that it's got a lot to do with heat, and unlike the 2-week maps, they looked dry in the West. They looked dry and hot in the West, and then we all know that a lot of the corn that was planted early, it's not to the finish line by any means, but it's certainly 80% there, probably in a lot of places. Now, stuff that was planted later in May certainly has got a ways to go, but I've got to think that folks are saying, hey, if we get into this trend. Beans are obviously an August crop. Yeah, you might build this huge bushy plant with all kinds of pods, but we know that if you don't get August rain, you're in big trouble. And so I do think that the heat is the reason why we've seen this pop here this week.
Yeah, I kind of think so too. Let's go to drought or lack thereof.
So the USDA released weekly drought monitor data yesterday. Temperatures across the Corn Belt were below normal this past week. Precipitation was also below normal for the majority of the region. Drought conditions worsened in southern Ohio and northeast Illinois. Conditions improved in southern Kentucky, eastern Illinois, and southeast Indiana. Drought conditions across the High Plains were mostly unchanged on the week, with the exception of worsening conditions down in southwest Nebraska. When we look at the percentage of U.S. areas experiencing drought, corn and soybeans 4%, winter wheat 24%, spring wheat 15%, and cattle country 14%.
Those corn and soybean numbers, 4%, are bottom of the barrel. They don't ever get lower than that for the most part. You can see you've got drought east of the Corn Belt and west of the Corn Belt, but not really in the Corn Belt. Matt, you mentioned in our premium video yesterday the corn usage factor on the East Coast, and there are corn growers in the Carolinas and in Virginia and places like that, and they're going to have some major problems. You thought that maybe that could have an impact on the basis market in, say, the Central or Eastern Corn Belt?
I do. I mean, I really do, Joe. I mean, I've been out there before, when guys are getting a buck over for corn. Whenever I was under the impression they were, to be honest, maybe getting 50, 60, 70 under. Like, I didn't even really think about usage being as strong as what it was. I knew it was out there. I mean, I know they feed a ton of birds out on the East Coast. There's a ton of hogs as well. And then quite frankly, they can't grow enough corn. So, if you're a corn deficit area, as well as I do, you got to find a way to get it out there. And so basis typically runs very impressive levels. If you don't raise corn out on that portion of the map, if you will, I'll tell you what, I think your Ohio basis, maybe parts of Indiana, you're gonna have to draw that corn out there. And that's what you're probably going to see. I mean, I've talked to a ton of folks in that Pennsylvania down to the Carolinas area, and they're saying our corn crop's in huge trouble.
Yep.
I think they've gotten a little rain this week, but for some of them, they feel like it's too late.
Oh, I'm sure it's too late in a lot of those places.
North Dakota's spring wheat yield is estimated to be the highest on record. After touring 257 fields, the Wheat Quality Council is estimating North Dakota's spring wheat yield at 54.5 bushels per acre. Last year, the tour estimated the crop at 47.4 bushels per acre. Abundant domestic wheat supplies have pressured prices. Wheat futures are on track to decline by more than 5% this month. Despite the anticipated record yield, there are concerns about profitability due to the presence of scab in some fields and low prices.
Wheat futures, the market is very, very poor. I don't think if a wheat rally comes, I don't know that it's going to be on a U.S. crop issue anytime soon. Matt, how do you rally the wheat market in this environment with this sort of headline?
You need something major from a supply disruption out of the Black Sea region. That's the only thing I can think of. I mean, period. Anytime the wheat market gets to where we don't feel like we can move it, you either need something like that or drought in Australia, something with one of our producers that typically exports a fair amount of wheat. So I don't know. Black Sea region, though, that's my pick. I mean, I don't know. I don't wish ill will on anybody, but the wheat market, it's been pretty poor, that's for sure.
Very, very poor.
U.S. economic growth was much stronger than expected during the second quarter. GDP increased at an annual rate of 2.8%, surpassing the forecasted 2.1% increase. Strong business investment, along with robust consumer and government spending, bolstered economic growth. Also during the second quarter, the PCE price index, a key inflation gauge for the Federal Reserve, rose 2.6%, down from a 3.4% increase in the first quarter. With all of that being said, a report from the Philadelphia Federal Reserve earlier this week revealed that credit card delinquencies are at an all-time high. The Federal Reserve is expected to hold rates steady when they meet next week and then make a rate cut at its September meeting.
GDP has been positive every quarter really since we had those 2 consecutive quarters of negative GDP in 2022. So a lot of people have been betting against the U.S. and the U.S. economy, but it appears to be strong, at least from this metric. I know inflation is still a problem, and the ag economy is totally separate from this economy, Matt.
Oh, yeah, it's totally separate. I mean, economic numbers,
almost an inverse relationship in a lot of instances.
Yeah, totally. I guess with a lot of the numbers that come out, Joe, and if GDP is growing, that's great. Clearly inflation is still an issue. Clearly, it costs people a ton of money just to go to the grocery store, really to do anything in life right now. But some of the government numbers irritate me somewhat in that we go back and adjust them so often.
Oh,
It
yeah.
is an election year. Quite frankly, I don't believe any government numbers right now. I hate to be like that. I just don't believe them, and so. But I hope that they're correct. As far as the U.S. farm economy, if we do raise a 182 or better and 52 or better on corn and beans, Joe, I'm pretty concerned what the farm economy is going to look like. It's beyond concerning to me. It's probably a topic for a different day.
You know what's interesting? You look at this chart. We had 2 consecutive quarters of negative GDP in early 2022. Those were the best commodity markets we had seen basically ever during that period. So there is an inverse relationship here. Absolutely. What did cattle do yesterday?
They closed higher. Feeders were up 32 cents to $1.50 higher. Live cattle were up 15 cents to $2.32 higher. Box beef was mixed yesterday. Choice ended the day at $312.46, down 22 cents. Select ended the day at $295.11. That was up $1.15.
Do you have any concerns about the cattle market, Matt? Yesterday was good.
Yesterday was good. I still think anytime you got a yesterday was good type mentality, I think we need to be stepping in, at least hedging risk. If we don't end up with loss, like for instance out west, like I'm talking about, extreme heat would certainly open the door to that. If you don't, I still think that the cattle investor is very reluctant to push this thing sharply higher. It just seems like they have been the last few weeks.
Yeah. Outside markets this morning, U.S. dollars about flat. Stocks are attempting a recovery. The S&P is up 42. The Dow is up 250. Bonds about flat. Gold's up $20. Crude oil is down 27 cents. And the September WTI at 78.01. Have a great weekend, guys. We'll be back on Monday.